Welcome back. You're still tuned into Mid-Cap Radar on CNBC-TV18. Let's talk about the big story, the US sanctions which are coming on two big Russian oil and gas companies, Rosneft and Lukoil. What the impact could be on overall Indian refiners, because right now, remember, around 30% of total imports are coming in from Russian oil and gas companies. What the impact on the entire oil and gas space be, and individual names like HPCL, MRPL, we have the other oil marketing companies as well. Prashant, Vasisht, who is the Senior Vice President and Co-Group Head of Corporate Sector Ratings at ICRA, along with Ajay, who is the former Union Secretary of Commerce and Industry, is joining us now to discuss more. Gentlemen, good afternoon. Thank you so much for joining in. Prashant, let me start with you first up. What do you make of these sanctions that have come in? Remember, European Union had done it last year. We had UK as well, who made some sanctions on these Russian oil and gas companies. What is the impact on overall oil and sector in the country, and any individual names do you think will be severely impacted because of this?
Now that some of the Russian producers have been formally sanctioned by the US, it would be difficult to purchase oil from them. And accordingly, some of the purchases that India was doing from Russia would be impacted and would have to be cut down.
Okay. Mr. Dua, first up, thank you so much for joining us. What we want to understand from you, sir, is number one, what was the kind of discount that India was enjoying when it was actually purchasing, oil from Russia? And we also understand that a large portion of that particular discount had actually faded away in the last few months. So given that, what is the kind of hit that you feel India would have to take in case these sanctions, or given the fact that these sanctions are now come into effect?
Thank you for having me on the discussion. The discount which we have got availed of in the last 3 years, ever since the sanctions were imposed subsequent to the Ukraine war starting, were fairly substantial. These had to be kept under the cutoff level of $60 a barrel, and Russia had invariably, in order to ensure that India continues to buy from it, kept the price below it, even when it had gone up to $65 to $66. Yes, of late, the discount had been reduced, but we continue to buy a fair amount of oil from Russia, and that some of it we've diversified, including we've been buying the US oil, US crude oil, and of course our traditional suppliers in the Gulf. Now, as things move forward, I think India would have to accept the situation that Rosneft and Lukoil, first upon them, UK had imposed sanctions last week, and yesterday, the US, though they come into effect from the 21st of November, giving us enough lead time to make the adjustments. But it is going to affect us for the simple reason that the biggest exporter from Russia of crude oil is Rosneft. It might be a very large producer. Also, 6% of the global crude gets produced by just Rosneft. In addition is Lukoil, which is fairly large as well. So sanctioning of that in two ways is going to affect us. One, make it difficult for us to continue to import from Russia. And second, the global supply itself of crude oil will get impacted, causing an increase in the crude price, international price of Brent, NYMEX, whatever.
Take that point, Mr. Dua. Earlier we were speaking with Mr. Surana as well, who's the ex-CMD at HPCL. He indicated that maybe there's enough supply in the market for not to impact the crude prices so much. But I do take your point on discounts, because that is something that most of the refiners were enjoying, and that was showing in their refining margins as well. So, Prashant, let me take this forward with you. What was the discount that Russian crude was allowing earlier? How much lesser is it currently? And do you think refiners will take a major hit because now they will not get this discounted crude?
As per the when initially India started buying crude from Russia, the discounts were quite substantial, in 2 digits at $15–16 per barrel as well. But of late, these had shrunk, given that more and more countries were buying. A lot of other countries were also buying from Russia, namely Turkey, etc. and the discounts had reduced to about $2 per barrel. Now, if we look at about 35-36% of the supply coming from Russia at that kind of a discount, the impact on the overall oil import bill is not very substantial. It is just less than 1.5%. Yes, so if we replace this crude with market price crude, the impact would not be very large. Secondly, the other point to note is that though this will impact at a gross refining margin level, the marketing margins continue to remain healthy given that crude prices have come down substantially from March end due to various factors. And accordingly, this should not be a huge hit on the profitability of the oil marketing companies.
Right. Mr. Dua, like Prashant just mentioned, probably not an immediate hit as far as earnings are concerned for the companies. But given the fact that, both of these companies were significant suppliers to the global market, you also saw a sharp reaction in crude oil prices overnight. So in that case, do you see, the import bill, number one, rising? And number two, who are the other suppliers that India can look at apart from the US as well?
I'm one with you on the impact of the sanctions upon these two entities of Russia. Yes, they are large suppliers. As I mentioned, the Rosneft's entire production of one company forms more than 6% of the global supply. If it is taken off the market or gets off the market or halves it, it is going to impact the global prices. How much will it be also depends upon the continuation of the demand. If the world doesn't grow well, it continues to be slowed. Its activities, economic activities remain slow or laggard as at present. Maybe the impact to some extent will reduce, but let's not deny that it is going to be there. Second, now, how does India handle it? India will have to handle it in two manners. One, turn to its traditional suppliers in the Gulf and in the Gulf, Africa, as well as in Latin America. But there is an excess capacity in Saudi Arabia, refining capacity. And I think it is not only just refining, the crude capacity itself. I think India could probably increase its imports from Saudi Arabia, and just as well. Second, if the US prices, including the logistics cost of transportation, get moderated, it would help us to do that. And I'm of the opinion that let's also look at the cost of the US continuing to levy 25% extra penalty on us because we continue to buy from Russia. If our imports from Russia reduce or start reducing, we might take some time over it. It maybe President Trump would relent and remove this 25% due penalty upon us, and understanding that it cannot be done overnight, but the tendency is very clear. The intention is there. We are going to then benefit in terms of our exports back to the US, which have been taken off of our $80 billion, about 40 to 45 billion are hit. Our labor-intensive items have been hit. So let's look at the overall picture. Yes, we were willing to buy the Russian oil. We have long tradition of buying defense equipment, other stuff from the US or from Russia, with which we have had a good partnership. But if it has been made difficult for India to continue with it, we have very few options but to make the best of the situation. And I think if the side benefit is that the US would relent, we would probably make some money exporting there, what we might be losing because of moving away from the discount and the higher prices in the global market.
So you said Rosneft is around 6% of global supplies as well. If that amount of crude also goes away with Lukoil, it would be even a higher number. And would that not impact crude prices overall? So even if that means we are importing from the US, we'll still have to pay higher prices, higher than what we've been paying to Russia as well. So ultimately, it'll be a negative impact on our books, India's books overall?
Certainly. I have no doubt about that the sanctions would affect us because of the two ways, as I said. One, having to buy from elsewhere. Second, the overall impact of the global price on the global prices, provided that demand continues to remain robust. If the global demand itself falls, then we may not see such a high rise in the global prices. Second, I am emphasizing once again the side benefit for India to move away from Russian oil. And that's not what we wanted to do. We had resisted it so far, is the fact that Mr. President Trump may have to remove the 25% duty penalty upon us, which will make our exports to the US easier and cheaper. And I think we might be back in business with the US.
Well, thank you so much, Mr. Dua. Thank you so much, Prashant, for joining us and giving us your views on this developing story as well. It'll be important to track, what are the key developments as far as the oil market is concerned going forward as well. Well, we'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.